Yes, we did. We did. That's another way to think about it. We did. We did.
Where does it come from? Do you just print it?
We print it digitally, and we do that by buying treasury bills. That actually increases the money supply.
Financial Turmoil Explained.
Good morning, ladies and gentlemen, and welcome to the show on this Tuesday, the 10th of May, 2022. Thank you for tuning in. I'm glad to have you guys here. Now, we've entered into the first stage of the economic collapse now. And the first stage is what I would refer to as mild effects. Mild effects, but they're out there and you can spot them. The first one big effect is the fact that the East is polarizing and separating from the West. This includes like a block of countries that are in the East. You know, Russia's obviously Russia and China. And then you have North Korea, and you have a number of other countries like Iran separating themselves and forming a bloc or a union. And they are like on one side of the world. And then you have the other side of the world, which is the West, you know. And you remember during a long period of time there, like in the 2010, you know, go back to 2010, how things were. You know, you had McDonald's all across Russia, you know, and there was trade between these countries, between China and the United States. And China was producing a tremendous amount of goods all during the early 2000s. And we were buying it all up, you know, and we became reliant upon China, especially for things like auto parts, you know, to keep our cars running over here, you know. And Chinese-made auto parts were cheap, plentiful, any part you needed, and they were pretty good parts, you know, like things like brake rotors and everything you need, springs and pistons and whatever you need to keep a vehicle running comes from China. Well, China kind of took over that, you know, and an awful lot of parts were made in China, and you keep your vehicles repaired here. Well, you know, because this block is forming now, what's happening, parts and stuff aren't coming from China like they used to. Well, it's still coming from China, but China's doing this. There's been a trade war going on for a number of years now. And now China's doing this thing with the COVID business. And we're not getting parts, or they're not coming in. They're coming in sporadically and stuff. And what are you supposed to do? You got a big semi-truck, you know, and you need some sort of you need some sort of caliper or something, or some sort of brake part or something for the truck. And you go to the parts dealer, the big company that owns the truck or whatever, goes to the parts dealer and they say, well, that part is on back order. The guy says, well, what am I going to do with my truck? Well, you got to sideline the truck until the order comes in, and it's going to be 10 weeks at least, maybe 2 months, 3 months, you know. And so the truck sits on the side. It's not going just because one part is missing from China. Now, how can we rely upon all these parts and stuff? Well, we can't. And this is also going to slow down our chain, a just-in-time delivery chain here in America. And you're seeing it start to reflect in the stores and stuff. This is going to get a lot worse in the initial stages now that we're in the initial stages of this breakdown of society. You also have things going on like they're trying to make a transition now over to clean renewable energy or whatever, you know, and from the old power grid. And so I'm going to start the charts right here. Take a look at this. Power grid operators warn of potential electrical shortages amid transmission to clean energy. Now I'm going to tell you, there's a new thing out there. These heat waves are getting more intense than they used to be. And, you know, it looks like the power grids are very susceptible to these heat waves. It says power grid operators across the United States warn that power generation capacity struggles to keep up with demand, worrying signs ahead of summer where heat waves could lead to rolling blackouts. If you can imagine a city, and this is what's protected us from heat waves, you get a big city of, say, 4 million people. Could be somewhere anywhere in the United States. It could be like Chicago or someplace like that. Or it could be even here in Canada, someplace like Toronto, Ontario. Get a giant heat dome settles in above the city, and then the grid goes down. That means the air conditioners can't run. Do you know how hot these buildings? These buildings could quite literally turn into ovens. And then you got the elderly. This could potentially be a worse situation than the disease we had sweep through for the elderly. If they get overheated, you know, a person can actually die from heat. And they die very suddenly if they get too hot. Their system gets too hot. Basically, their heart and stuff can't withstand it, especially the elderly. And so you get a city, and the power goes out to the city for maybe 2 days because of what's going on here with this power shortages and stuff. It says the grid instability, increased risk of power shortages. This comes as fossil fuel plants are being retired more quickly than they can be replaced by renewable energy and battery storage. So they're making this transition. But during this period in time, evidently they're shutting down a lot of these fossil fueled power plants. And so, you know, you get a heat wave, everybody wants to run their air conditioner. Next thing you know, it puts extra strain on the grid. Blackout, you know, and then these buildings can start to overheat. They don't have even adequate ventilation in the buildings anymore because they've relied so much on your big air conditioning units. You know, what do they call them? The heat and cool. You know, I can't think of the name. I'm having a brain fart, but anyway, you know what I mean. These big air conditioning units that kill these buildings and stuff. All of a sudden you get a power. I mean, you got to start thinking in terms of how am I going to cool myself if the temperature goes up to 110 degrees, which is a possibility nowadays. It can actually go up to 110 degrees outside and stay that way into the evening, stay into the 90s in the evening even. Well, for you guys out there on Celsius, that would be like 32 in the evening and nearly 40 during the day. And even in the evening, it doesn't cool off. And how are you going to stay cool? This is a problem I've been talking about. It hasn't really materialized in the last year, but I'm just saying it could happen. And your power's out, you know, people are going to start to, especially if the power doesn't come back on after a number of days. People might start to become agitated and upset, you know, naturally, and it could extend out of control in situations like this because there's more than just this coming at them. There's also the price of food going up unnaturally high, lack of food supplies, lack of parts to keep the trucks on the highway, lack of fertilizer to plant next year's grains and produce. There's just a myriad of problems coming at us, and this is the initial stages of this collapse, is these problems. Later, the financial system's going to come into play bigger than all these other problems put together. And this is ultimately what's going to lead us to stage 2 of the collapse, which I've described as being brutal. Far more brutal than stage 1. So we're in stage 1 now. How long is stage 1 going to last? Well, it could last quite a little while. Let's hope it lasts quite a little while because we don't want to get to the brutal part, you know, of when it goes into stage 2. And it's a financial system and or war that could lead us into stage 2. And I believe that stage 2 ultimately is inevitable. Let's take a look at the silver price today. It's up 10 cents, 21.86. Now, a little bit of a relief rally right now. Markets, everything fell a little bit too fast, too furious. It was being priced in, the half-point rate hike that the Fed did. It's pretty much priced in now. But there's another one coming, and they're going to price that in. And so more downside pressure to everything, except for gold and silver. Here's the thing, guys. after we progress through a few more of these rate hikes from the Fed and the markets start to fall off, it's going to hit a certain point where people start to panic out there. And when they start to panic, they'll start to look at gold and silver again. And gold and silver might have a rally at that point, even mid-crisis. In other words, mid-deflationary in the system when the stock market's really going to pot. The stock market's swirling down the toilet drain. When all the markets, that's when gold and silver really might start to pop again, because they are a safe haven asset. And when investors really get scared, I mean really scared for their financial future, and they see everything else evaporating, including crypto, gold and silver are the premier safe haven asset, and that fear might create a fear trade back into gold and silver. I'm not saying it will, I'm saying, but there's a high potential that it could. And so this is why, if you really want to have your money in a safe place, there's no other safer place than real physical gold and silver, ultimately, to have your money in this environment. Even though it's taken a little bit of a hit over the last number of days, this is the initial part of moving into this financial crisis that the Fed's generating. They're going to change positions too, and when they change positions, then watch the price of gold and silver go to the upside. Cryptocurrencies today, what we're looking at is on Bitcoin, $32,000. Doesn't want to go below that, does it? But it might be forced down a little bit lower. And you got to look at it as a buying opportunity, because ultimately, when this whole thing changes and the central banks are done with their tightening and it's all over and they've went back to loose monetary policy, which they're going to have to support the system, ultimately, what we're going to see is the biggest turnaround ever for gold, silver, and cryptos. But gold and silver are going to take off first, and there's going to be none to be had. You're not going to be able to buy it in the physical form. It's just going to be gone, poof. And I've said this for years. When that time comes, it's going to disappear. There's going to be none. You aren't going to be able to buy any. And so there's going to be big money still chasing after hard money at that point in time. Not going to be able to buy gold and silver. Where do you think they're going to go? They're going to head into crypto. And it's going to be big money. Scared big money, because they're going to know that inflation has actually won at that point in time, because the Fed has capitulated. The Feds gave up, and they're not even trying to tighten anymore. They're just throwing the money out there left, right, and center because they're forced to, because they've got a crisis on their hands. A banking crisis, a crisis in the financial system where everything is deflating, and now they got to, instead of fighting inflation, now they'll be having to fight deflation, pumping the money into the system again. And so you're not going to be able to get gold and silver, so the money's going to flood into crypto at that point in time, and that's what's going to really make crypto. And so look at this as a buying opportunity when this price gets low enough on crypto. You got to have, to protect yourself in this financial hurricane that's coming, you got to have these things, and they've been knocking them down lately, so they don't look good, but they're going to shine again. They're going to come back. Take a look here at Dow Jones, 384 points up today on the Dow, 32,630. Little bit of a relief, but you notice it ain't going up as much as it came down. They've priced it in, basically, that first cut. Now, that's actually the second cut. The first cut was 25 basis points. Second cut was 50. I think another 50's coming. And so they expect the markets to roll back down again the next time they raise interest rates. We're taking a look now at crude oil at 103.23. Move index today, 125. You notice this trend upwards over the last year? This is a meter on when the system's actually going to break. I'm keeping my eye on what the Fed's doing, and I'm going to be telling you guys when I think that they're going to turn and change direction. We're not there yet. Watching the Fed, I would say that they are still got the poker face on. They're still holding that hand of cards which is a bunch of garbage cards, you know, they haven't got nothing in their hand, but they're still holding that hand with a poker face, and they're still calling the board. I mean, they're like pretending like they got a really good hand, you know, of cards when they fool at everybody out there. They got a poker face. When they start to squirm in their seat and their facial expression starts to change a little bit, and they're getting ready to fold, I'll let you know. I'll try to let you know anyway. I'm going to try to stay on top of it. And that's the time for you to buy into equities. Right then. If you can hit that spot where they're going to fold, the Fed's going to fold, you know, but we're not there yet. Let's take a look now at bonds and rates, and we're looking at a little bit of the pressure coming off. I'm awful suspicious. Who's buying all this crap? Are they buying it on the QT? I mean, the Fed? Because look, they've taken an awful jump. The yields have taken an awful fall on these. Look, the 10 years come back down below 3% at 2.96, and the U.S. 30 years at 3.10. Take a look at the U.S. dollar index at 103.76. Thank you guys for listening to the show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.